do it. All right, guys. Good morning. Welcome to our morning market update. Can't even talk today, which is great because I don't need to talk to trade. uh, our morning market update here for Friday, August 18th of 2017. This is George Papazov from Trade Pro Academy. I want to talk to you about a few things today. First of all, let's start out by saying yesterday we started to see volatility increase, and we got a chance to jump in and take some advantage of it. So yesterday was a good day. Today is going to probably be even a more volatile day, but I'm going to throw some caution to the wind here. Today is options expiry. So the option series expires for the monthly contracts. The weekly ones also will expire. Well, actually, not the weekly, the monthly one that would have started will expire today. There's going to be a lot of offsetting positions. There's going to be a lot of delta gamma hedging, a lot of portfolio managers that take risk off the book, reshuffle risk, buy new options. It's a kerfuffle. So be careful today. I'll tell you this, usually when markets trend and go into an options expiry Friday, what ends up happening is we start to see a little bit of a range form as market participants battle it out. When market sells off, somebody will go in there and do an options trade, pop it back up. There's also a theory that's called max pain theory, which says options expire or the market expires at the level which is going to cause the maximum loss to the maximum amount of traders in the options market. So how do you find out the max pain point? Find out where there's the most amount of contracts that are open interest and use that as support or resistance. We're going to do that in their trading room after this update, and we're going to actually use those statistics in that number. All right, yesterday we got some stats out of Gap, up 5.5% on earnings based on improved fiscal year guidance and forward guidance. In Asia, Japan's down 1.2% this morning. Hong Kong's down 1.1%. China's flat, and India's down almost a percentage point at 0.9%. So you could see the negative trade from yesterday spilled over into the Asian session. So from U.S. negative close right at the lows, we really went in there and hammered the day yesterday and closed it into the lows on decent volume. And that picked up in Asia, that selling. In Europe, London's down 1%, Paris is down 1.1%, Frankfurt's down 0.9%. And so you could see from Asia, the spill went into Europe, and that contagion kind of caught on there as well. So it's also bearish. And futures here in the morning in the United States, Dow's up 0.1, S&P's up 0.1, NASDAQ's up 0.2, crude oil's up 0.6%. I think the crude sell-off trade is done. We're going to run some buy stops, it appears, on crude after, and I'll tell you why in a minute. Something happened yesterday that helped really put everybody that's short into a short, and when everybody's short at the same time, they're all buyers. That's the dynamic that 99% of traders miss. 1,000 or million short contracts means that that's a million buyers waiting to happen. It's just a matter of when can we pinch them to the upside, and if we can, we'll squeeze their stops. So I'm looking for a stop hunt trade today on oil. I'll give the trading room guys some levels. We'll track through it this morning. Consumer sentiment comes out at 10 a.m. Watch out for that number. All right. And Baker Hughes rig count at 1 p.m. So that'll be very interesting for the oil trade. If you're going to get into a swing trade, be very careful that you don't do it until 1 p.m. You need to factor this number into the market before you get in there and hold anything overnight. In fact, I think it would be a terrible idea to get into a swing trade going into a Friday on an option expiry day into a weekend risk. I wouldn't do that. But that's my insight. Today's options expiry, we talked about increased volatility. Yesterday, what rattled the markets a little bit is Gary Cohn's exit. There was talk on Twitter. A whole bunch of people tweeted saying he's rumored to want to leave based on Trump's demeanor and tone post Charlottesville. That wasn't true. That was confirmed to be false. So the market dropped on fear. It rallied just as quickly and then continued lower. Now, it was really bad timing. It was literally the worst timing ever, but you could hear it. So the market just bounced back. It said, yay, Gary Cohn is not leaving. That's just a risk that was a rumor. That's fine. We'll buy it back up. It almost went to the open of the day. But then what happened was the terrorist attack. All right. So 13 people killed and at least 100 injured in Barcelona. Hours later, police killed 5 suspects in a confrontation, and ISIS claimed responsibility. I mean, my heart goes out to all those people. That's sick. And I don't understand it. I don't understand who and how you get the motivation to do that. But man, my heart goes out to all the families out there. That kind of stuff, I hate to hear it. I knew the market was going to go on that. The news go down. I was short. But sometimes as a trader, you have to do things that feel uneasy. I hate to say this, but if there's an opportunity to trade, you know, it's your job to go out there and make the money. So if it's dropping and you know it's a terrorist attack, I mean, you're going to short it or somebody else will, right? So I was short. It was devastating, but that's kind of something you got to deal, you come to terms with. In 2009, when I traded, I'm going to open up and be honest with you guys, that's when I had the most amount of difficulty. I had real difficult time being short and taking phone calls from clients who were blowing out their accounts, their pensions are going bust, and any savings they had is evaporating. I felt bad. I really did. And that's what encouraged me actually to start Trade Pro Academy. In 2012, it's when I decided, you know what, I had enough of this. I had enough of work. It's time to get out there and make a change for the people. Anywho, that's an aside. S&P 500. I'll give you some support levels, but first let's talk about this. At 120 yesterday, Fed's Kaplan. Again, Kaplan's a moderate, so he's not dovish or hawkish. He's a moderate voter, so he's currently on the FOMC and votes. He says that aging and slower workforce growth has hampered U.S. growth. So he said that. He also says he sees GDP growth at 2%. He's patient with regard to another rate hike. 10-year yields say to me that growth expectations are sluggish. But he also cautioned we need to be careful on additional rate hikes amid warnings from low bond yields. All right, that's a very interesting comment. He also said we should be patient and judicious in considering rate hikes. When you get, the reason I wanted to share that with you this morning is when you get a moderate voter, somebody who's right down the middle, starting to say that, you start to get a tone that the Fed is overall dovish. Think about this. The guy who's down the middle is saying, look, maybe we raise a little bit quickly. We got to be a little bit more cautious. So think about what the doves are saying. They're obviously saying don't raise. If the hawks are more dovish and the midline or the center line people are more dovish and the doves are dovish, that probably means we're not going to get a rate hike. I used to think we're getting a rate hike in December. That may be off the table. I think we're just going to get some balance sheet normalization to end the year with the Fed. I found that interesting. Anywho, it's Friday. I hope you guys have enjoyed this update. Let me give you some levels. S&P 500, I think this sell-off goes down to 24, 26 quarter based on a very secretive proprietary model that I can't tell you. Let's support. Resistance on oil is at $48 today. I think we'll rally up there and try to test some of the 48 liquidity deep into the 47s, at least maybe 47.92, 93, and 46.10 is going to be a support on oil. So we got a little bit of a drop to go, and then we can rally back up. Yesterday's oil report was very bearish. All right, it showed a big increase in production. Wednesday's report and natural gas showed the same. And I think in the next few days, I think the trade is ripe with too many shorts in oil. I think we got to squeeze them out. I mean, you listen to any of these market updates from earlier this week, and you would have heard what I told you. Short oil, short oil, short oil. Any chance you got, any rally, short them, get in there. Not anymore. I'm changing that tune. Today's cover your shorts and take some profit before the next guy does, because too many people start covering their shorts. That results in a stop loss run, and that means I'm long. All right. That's all I got for you guys. Gold is above $1,300. We got our entry here at $1,274. We talked about this in our morning market update. We gave you the level. We gave you the entry. I got in. All right. I'm long gold at $1,274. It broke 1,300. I'm targeting 1,330, about 1,336. Not going to hold all the way, but that's my target. You guys have a great day. Trade Pro subscribers, let me spin around here and open the room. I realize I only got 10 minutes, but that's more than enough. All right, guys, take care, YouTube. See you on Monday. Have a phenomenal week, and I wish you guys the best of times. Remember, work hard, but when the weekend comes, play hard and enjoy some time with your family and friends and loved ones. Take care. Goodbye. See you Monday. All right, Trade Pros, hold on here. Let me